Are you looking to get out of debt or possibly purchase something? Not that I recommend that. What I do every month is I take a look at the latest interest rates and then compare them month to month to give you an idea of the trajectory. If you're looking at these various types of loans to potentially use them to help you get out of debt, or maybe you have to purchase something right now like a car, even though rates are fairly high, at least you can get an idea of what they are with respect to things like your credit score. And then at the end, I'll tell you my top methods for getting out of debt. So let's look at the three things we compare month to month: credit card rates, personal loan rates, and car loan rates. First up, we've got credit cards. This is the same resource, and all of these resources are linked in the notes, but this is the same resource we look at from month to month. The last show was a month ago in mid-February, and let's see, the average rate was 24.61, which you can actually see here. And then now the average is 24.66. And so you can see it's gone up slightly, not a lot, but still extremely expensive credit card rates. You don't want to hold credit card debt if you don't have to. You want to try to either get out of it or move it to something else with a lower rate. Then they're showing average rates for various types of things. You can take a look. But to give you an idea, the average is still over 24%. All right, next up, let's take a look at personal loans. What's a personal loan? Personal loan is essentially just going in and saying, hey, I need a loan. They're going to ask you what it's for, but usually they don't care what it's for. However, there are loans that have collateral and some that don't. Collateral being something that you would have to give up if you were unable to make the loan payments. For example, you can think of a car loan as a collateralized loan. If you don't pay the loan, they're going to take your car. But when most people think personal loan rates, at least myself, that usually means I'm not putting up any collateral. They're going to give me a loan. And in the past, I've used it, and others, I'm sure, it's a popular way of consolidating your credit cards onto one loan. So you get rid of your credit card debt on the higher interest rate, assuming you can get a personal loan at a lower interest rate. The difference is also that the personal loan is called an installment loan, and that shows up differently on your credit report than a credit card loan, which is revolving debt. So it'll also give you a fixed payment and a fixed amount of time, meaning you make that payment for the specified number of months, and at the end, your debt's gone. So personal loans, if we look at this, the average last time was about 20.81. This is showing week to week, but last month it was 20.81 on average. And the low, we're going to look at the average low rate, was 11% a month ago. So rates have gone up. Now we're looking at an average of 20.93 and 11.24. So they've gone up a quarter of a point. No surprise there that rates are still going up because the Fed just had a meeting. I'm making this video on March 21st, and the Fed just had a meeting the other day and said they're not cutting rates again. No surprise because they said they weren't going to cut rates until they got inflation under 2%. And I believe last month's rate was about 3.2% on inflation. So they haven't met their inflation numbers. The Fed is not going to cut rates, and usually you see that reflected in rates across the board. All right, let's look at cars. Now, last time, and I like to look at, you can see they have it here, so I like using this one. They've got it by essentially your credit scores, the non-prime rate. Let's just look at the middle of the road. Last month, new car was 9.29. Now it's 9.6. Last month, a new car was 13.53. Now it's 14.12. That's almost a 0.6% gain on a used car loan. And look, if you've got to buy a car, I understand you have to buy a car. But I can't imagine taking out a 14 or 18% loan on a used car. That's astronomical. So if your credit doesn't allow you to get a lower rate and you have to buy a car, my suggestion, and I'm not a financial advisor, none of this is financial advice, but personally, I would try to buy the cheapest and most reliable thing I could find. Go online, look at the lists of which cars they're most reliable, or at least which car companies. I think the top three are typically Toyota, Lexus. Of course, they're essentially the same company, and maybe Porsche. Don't recommend you buy a Porsche right now at 14 or 18%. And there's others. It depends on the list you look at, Honda, you name it. But I would go as cheap as I could if you've got to get one of these higher rates. So this gives you an idea of rates, and the trajectory is still up. So obviously the number one thing, in my opinion, is not going out and buying things. It's getting rid of debt. Now I have a show you can see here of one of my previous episodes, videos where I go into 6 different methods, great methods of helping you get rid of debt. There's the snowball method. I discussed the avalanche method, debt consolidation, basic budget and expense reduction, velocity credit card method, cashback cascade, which is my favorite. I've used all of these methods. I've done this myself. I got out of substantial debt, and then I threw a bonus one in there as well. So take a look at that video. It'll be in the description. It'll be at the end of this one, and you'll be able to click through, watch it, and get some ideas of how you can get out of debt faster. It doesn't look like the economy is getting any better. It looks like job layoffs have been going up. Interest rates are going up. Protect yourself, have an emergency cash savings, as Ramsey would tell you, and try to get out of debt, particularly high interest rate debt. Thanks for watching. We'll take a look at this again next month. Please subscribe to the channel. I put out as many videos as I can to help you get out of debt every week. Thanks.